Hello and welcome to Unleashed. I'm your host, Will Bachman, and I'm delighted to be here today with Scott Markman, who is the founder of MonogramGroup. We're going to be talking about what they do today. We're also going to be referring to a resource. We'll include a link in the show notes, a resource that Umbrex produced, which is the Umbrex Diagnostic Guide to Branding. Scott, welcome to the show.
Will, thanks so much for having me. It's really a pleasure. I'm not sure this is relevant. You want to include this, but part of our kind of early conversation was that about a year ago, I jumped into the podcast pool and started my own podcast. And so in addition to having been a guest several times, I'm now on Will's side of the fence. And so it's pretty cool to sort of be back on the interview side of the fence, having spent a year of my life doing what Will does. So thanks.
Let's give a shout out. Well, let's give a shout out to your show. What's the name of your show?
It is called Beer Stories for Private Equity. And so while the audience profile that listen to this podcast is different than mine, there is overlap, obviously. And so we lean into issues related to the private equity sector and the firms, the companies they own, and the consultants and so on.
Okay. And the thesis of your show, are they like required to consume one full beer while they are a guest on your show? Is that a little how
Absolutely.
it works?
It is. If they don't have a beer or a damn good reason, we cut the conversation. And it is a part of our playbook that about 2 minutes in, we stop, we identify the beers, and then on camera you have to take a slug.
Right.
Yeah, it is part of the playbook.
All right, love it. And so tell us a bit about MonogramGroup before we dive into the discussion today. Give us a little bit of background on your firm.
Sure. So I'm the founder of the agency. We started in 1990, so I'm finishing year 35.
Whoa.
So I've been at this a long time. Classic entrepreneurial story. Started at a coffee table in an apartment near O'Hare. Back in the day, I moved to Chicago in 1988, back when Jim McMahon was still quarterback, and the glow of the '85 Bears was still alive and well. So kind of moved here for a job, didn't work out too well. And a few months later, decided to hang my shingle. I came from an entrepreneurial family. My parents owned a small business, modestly successful business in Baltimore, where I'm from. And so I grew up with the business being my sister and I used to joke was the third child in the family and had a sense of kind of what to do, why to do it, why not to do it, all that good stuff. And so I'm kind of a born entrepreneur. And when we talk about the kinds of companies that you interact with or that I do, that kinship is really important because I understand kind of the mindset and the passion and the challenges of entrepreneurship. So kind of just slowly built the agency over time. We had a couple of evolutionary steps from a design firm. I'm a corporate designer by education into becoming a full-fledged ad agency for some years, and then the last 20 being in the world of brand. Those inflection points came out of taking on a couple of partners who were college buddies and who had moonlit for me for a number of years prior to becoming partners. And they brought different skill sets and mindset to the table. One was a big Michigan Avenue agency creative director, worked on big global brands, Oscar Mayer and Bud Light and State Farm and all that stuff. And the other was a corporate market research professional who worked at Ameritech, one of the baby bills, and ran research there prior to kind of getting her golden parachute when SBC bought Ameritech and then joined us. So in 2006, when Jackie, the second partner, joined, it was like, what's the Venn diagram of a corporate designer and an agency creative director and a corporate researcher? And the answer was brand. And so we kind of settled on selling brand expertise and brand deliverables to the market. And we've been that way for almost 20 years now.
Okay. So what is the actual service you provide? Do you design logos and branding guides, or is it broader than that? Tell us a bit about your services.
Sure. So there is a research, insights, positioning, strategy, ideation around who or what is a brand today versus tomorrow, being able to clearly define it and articulate it. And then how do you build out the content, the agency creative side, to build this kind of ecosystem and content to a certain strategy, and I'll call it set of creative standards, and then think about building a reservoir of assets and then taking it to market, launching it, and sort of plotting out in advance how it will evolve over time and correlating it to the selling environment, regardless of the geography and sector and whether their channel partners are involved. One of the interesting challenges, but also opportunities with brand, and it's a common thing whether you're a startup all the way up to Starbucks. Any company only has one brand, but you have incredible complexity about audiences and competitors and go to market, inflection points, and again, channel, all that kind of stuff. And you have to be able to solve for addressing anybody's question. Who are you? What are you going to do for me? Why should I care? Why you? Why should I vote with our wallet? And why should I continue to re-up on that? That's what brand really addresses. But again, when you have, for Starbucks, you have consumers and you have employees and you have, coffee growers and you have Wall Street and you have social media and all these different audiences that a company like Starbucks cares about, you only get one brand. So how do you address specifics? What are you going to do for me? Because the employees sort of don't care about the coffee growers. What are you going to do for me as an employee, who was a barista versus a coffee grower in Colombia, right? You got one brand, one company, and you have to be able to sort of address those needs and not contradict yourself. There's a lot of complexity and messiness that brand strategy and thinking and architecture and creative is meant to solve. And it's that kind of world that I just described, in a few words, that is really the work that our agency does.
Yeah. And how do you define brand?
So we use a couple of kind of short phrases to define brand. And by the way, to the audience that's listening to this, if I queried 100 people and said, what is brand? You will get 100 answers. No two will be exactly the same. And the delta, from here, it'll be gigantic, right? The most common would be a logo. I would tell you, we believe that logo is the last thing. What brand is really two things. It's either we use the word DNA. It's connecting to, Simon Sinek's advocacy for, what is the why? People buy why you do things, not what you do and how you do them. So what is the DNA of the brand or the organization? Because it will impact everything, right? Literally everything. It should. And if it doesn't, there's a problem. And the second definition of brand is we say brand is the everything. There is not a thing about any of our clients that I can't, and the client should be able to tie back to brand. Regardless of how many steps removed it is or how abstract the client may think that is, finance, pricing, investments, organizational structure and behavior. How do you go to market? How do you sell your products and services? Why you? How are you tasked with cross-selling and upselling? What's the design of your products? How do you market them? All of these things can easily directly or indirectly be tied back to brand.
Tell us a bit about your clients, because you have a very particular focus on private equity. Tell us a bit about that.
Sure. So we have worked with very large global brands for, again, about 20 years. Life Fitness, world's largest brand in exercise equipment. We branded for the world back in 2008 and 9. A division of Brunswick, about at the time $750 million brand, sold in 60 countries. Is, even today, our work is out there. Mintel, one of the great market intelligence companies of the world out of London, we rebranded them for the world about 12 years ago. Our current largest client is a company called Sensata, public company, New York Stock Exchange, probably $4.5 billion in revenue annually, operate in, every country on the planet, world's largest maker of sensors that go into vehicles and other related technologies, right? So we reimagined their brand to a very interesting spec last year. So we have our share of big global public company, unrelated to private equity, clients and history and understanding and so on. Having said that, we spend 80% of our time directly or indirectly tied to private equity. Our history with private equity goes back to 1996, when, again, year 6 of the agency, and I'm just trying to, get new clients and all the usual stuff. And my next door neighbor worked with a bunch of guys who worked in the world of private credit when that was not a thing. It was barely a thing. And they were leaving a company in Chicago called Hella Financial that did the credit side of private equity deals. When private equity is a sector, so my fingers over here about that big. And they had this idea that they were going to focus on private credit for middle market private equity deals and start to steal share from Merrill Lynch and big banks, Chase Bank, and so on and so forth. And these 12 guys left, and my next door neighbor worked with these guys at their old firm and said, hey, my entire department just left. Maybe they could be a client of yours because they're going to need what you can do, and so on and so forth. I said, great. So I was introduced, pitched the work, and got it. And we created a brand called today Antares Capital. So Antares Capital today probably runs 75 billion of assets under management. They are owned by the Canadian government, and they probably have 500-600 employees. And so today, Will, in 2024, I can literally walk into any private equity firm in America, all 4,000 or 5,000 of them, and say one thing: I invented the Antares Capital brand, which is true. And I'm instantly credentialed because they became so successful and so big. So at the time, this is before websites were a thing. Email was barely a thing. Cell phones were barely a thing. They did good old-fashioned print advertising in the trade journals to kind of introduce themselves and go to market and so on and so forth, along with an army of guys who sold. Well, it took off. They crushed it from year one. And so our name started to get passed around this niche category called private equity, which today is 3,000 or 4,000 firms. Maybe back then it had 300, I don't know. And we started to get phone calls when that was a thing to help firms do X, Y, and Z. So we got introduced and catapulted into this world almost 30 years ago. So fast forward to today, as we built out this practice, we've had 90 private equity related clients between private equity sponsors, private credit, meaning lenders, big family wealth offices, and industry consultants. We've had 90 clients. In addition to that, and I personally, in the last, 7 or 8 years, have conducted over 500 executive interviews that are related to the work that we do. So that has been investment bankers, it has been representatives in institutional capital, pension funds, foundations, insurance companies, hired gun CEOs, founders/sellers of businesses to private equity. So when you think about sort of the insights and the understanding of who are these folks, how do they, again, relate? What are you going to do for me? That whole, very narrow, what are you going to do for me? Why should I care? In the world of private equity, there's literally nobody in America who understands this ecosystem, along with the work that we do in the brand work and whatnot, than we do, because we've just done so much of it. Now, on top of that, our client count today in the companies they own in the last 10 years is about 40 portfolio company side, which is its own thing, but obviously joined the hip to the PE firms. So you're talking about 130 clients. And in the world that we live in, Will, there's something called competitive conflict. Translated, if you're Leah Burnett and you work for Ford, you can't work for Chevy. And that's extremely pervasive at all levels of the agency world for obvious reasons. In private equity, it's completely the opposite. It is a badge of honor. And again, they reward name dropping. And I'm not a name dropper, but I walk into any private equity firm in America, and after Antares, I say, here's my list. And they go, I know those guys, and those guys, and those guys, and those guys. Oh, aren't they great? And do you know this guy? And all that kind of inside baseball stuff. I'm instantly credentialed to have a relevant conversation.
Now, when you talk about this, are you doing the branding work for the PE firm itself, like the brand of the PE firm, or of their portfolio companies, or both?
Both.
Okay.
So for many years, our business model was to get the gigs with the PE firms or the again, lenders, and I'll call it the firm, the immediate ecosystem. Today, we're doing a lot of that work, but it's really it's almost secondary to our strategic and financial interest, because the portfolio companies is the monstrous addressable market.
Yeah.
And if we're in the midst of kind of really pushing hard into that world and of having success. I mean, we're year 2 into really putting our chips on the table on the Portco side. But I'm really out to create a relationship with a PE firm, and hopefully it starts with the work for them. Let's start working together. Let's build trust. Let us prove ourselves, all that stuff. But ultimately, the carrot here is getting into their portfolio, because then it's lifetime customer value, it's ongoing revenue and relationship building.
Talk to me a bit, and maybe you give a sanitized example of what it's like to work with a PE firm itself on their branding. It seems from a naive perspective that PE firms, they're all kind of doing similar things, right? They have a bucket of money, they're trying to buy some companies. It's one thing to portfolio companies, they have all these different products and services, but the PE firm itself, how do you think about differentiating them and their personality, and why me and why choose us and so forth, to either invest in if you're a limited partner, or if you're an employee to go work there, or a portfolio company, why they should take your money? How do you think about differentiating these firms that are kind of functionally doing a similar thing?
Yep. First of all, I will confirm, your question, the underlying reality of that question. It is 95% true. The sameness and the overlap in this category is by design. Private equity is, by its very nature, risk averse and template driven. By design, it's not accidental. In fact, you aren't that way. You're not going to make it. Wildly different than venture, right? Venture is swinging for the fences. I'll take 8 strikeouts if I have 2 grand slams. I'm seeking the next big thing. Uber, right? If Uber is the ultimate example, then the whole category is around the people, the investment profile, the structuring of investments, series A, B, C, D, all that stuff is around swinging for the fences and grabbing unicorns, right? Private equity is the polar opposite. They are pattern recognizers. They are risk averse by nature. If I went to 3 private equity conferences this year. I could almost describe down to the thread what everybody's wearing. And that's fine. It is what it is, but it's an indication of persona and behavior and belief in what's required, or a precursor to, I'll call it, success and belonging. The insight, the emotional drivers of this are people that are looking to create a career, obviously create wealth for themselves and their colleagues, but fit into a certain persona and mindset. And so risk aversion to almost an exhaustive level is an underlying reality of private equity. Now, as a result, when you think about the messaging and the brand and the who are you side of that, and you have the proliferation of thousands of firms, and new ones are being created every single year, because the amount of partners or VPs will, create their own, and, it just grows from there. And so they are instinctively driven or incentivized to kind of do what everybody else has done, but it's just with their own shingle, their own name, and, Blue Street Capital or something, something that feels very templatized. And so we walk into that all the time and are asked with, as you just said, how can you identify and articulate what makes us different? And my answer is always, we know how to do it, and we will. We are very good at being able to identify small but meaningful things to agree upon and to amplify and to build around, given the fact that 70% or 65%, what you're ever going to say to anybody is pretty much the same as 500 others just like you. And that's not a bad thing. It's just the reality of what we walk into. But we're really good at sitting back and listening and picking at the pile and kind of go, there's something there. Let's talk about that. Let's expand upon it. Do you believe that? Can you imagine that being the top of your branding message pyramid that we're going to, build stuff around? Yes. And sometimes there's one person you got to get yes to. Sometimes it could be 6. That's fine.
Yeah, can you give some examples? I mean, could be your clients or could not be your clients of just rattle off a few PE firms and like what for you is their branding or positioning that like how they're seeking to be distinctive. It could
Sure.
be well-known firms like KKR, TPG, or it could be firms that I haven't heard of before. Like,
Sure. So one thing, since you threw out TPG and KKR and Carlyle and, the usual suspects, there are levels of private equity like anything else. Think of it as a pyramid, right? And think of it as probably having 3 levels. The top is the KKRs of the world, and it's all defined by AUM, assets under management. Think of the top as maybe having 50 firms, right? Thomas Lee and Clayton Dubilier and those guys. Then there's the middle market firms, like WindPoint here in Chicago or Madison Dearborn and folks like that. We play, for the most part, in the lower strata of that lower middle market. Why? It's as Willie Sutton said about Waddy Rob Banks, it's where the money is. That's where the money is. I don't mean exclusively, but relative to a number of firms in terms of opportunities and stacking of clients, that's where the money is. It's in the lower middle market because they're the most amount of firms by a factor of 20. That's number one. So number 2, anybody I would tell you about, and as an example, I don't give you, I promise you've never heard of, and that's fine. They're very successful. They're very common in their profile. So the firm I have in mind is a longtime client of ours named Prospect Partners. Okay. They're in Chicago. Again, you can look them up, prospectpartners.com. We got to them about 5-6 years ago when they were transitioning from first generation of 2 founders into second generation of 3 partners. And they had some stumbles. And so they were open to reimagining their brand from scratch. And we did all that work and worked with them ever since. Terrific company. So what came out of our due diligence and conversation was that Prospect Partners invested in deals on the smaller, almost 1 foot below the lower middle market as defined by EBITDA, overall scale of company and so on and so forth. But let's just say EBITDA. A vast majority of even lower middle market firms would take a pass at a lot of the deals that Prospect Partners does. They're too small. So they're almost like sub lower middle market in terms of who they go after and why. And they leaned into, at our council, a defining aspect of what makes it different and better and what they look for, what their expertise is, and the outcomes they get by the size of the deal and the profile of who they invest in. They're generalist investors, meaning they don't only stick to industrial, they don't mix of healthcare, whatever. Their defining characteristic is the size of the company and what it takes to build infrastructure. They're not very massively M&A driven. A model these days very common are these holding company roll-ups, right? Fractured markets like roofing or something. They don't do that. That's not really their model, but they're very good at finding a company, obviously, that is very put together, spins off cash, growth potential. But the things they're going to do to invest in and evolve that company to then sell to typical lower middle market or even middle market, most other firms don't want to bother with. It's just not how they're going to make money, what they feel comfortable with. If it's in their investment model, their investment thesis, these guys take on things that most people wouldn't deal with. And they leaned into it and said, we're expert at that. We have a track record. We know who we're going to sell to and other factors, and know us for that, and invest in us with your capital. Join us because if you're a young associate or a vice president or a biz dev person, if you're looking to sell your company, this is what you should understand and why we're the best choice. It all ties back to, not exclusively, but at the top of the messaging pyramid, size of deal and all that comes with it, because they'd be the first to tell you there are a lot of firms that just would never take a look at these companies, let alone put a bid together.
I just, while you're talking there, I've been looking at their website, and they have this positioning of, we speak entrepreneur, we act entrepreneur. Nice.
That would be our language. That's we put the words in their mouth. And again, there's implication to entrepreneur. Again, there's certain language in this world, founder, owner, operator. Entrepreneur has an implication of smaller by design.
Yeah.
And a vast majority of PE folks will not use that word. They'll use founder. They will think about entrepreneurially owned, meaning family or individually owned, or a couple of partners. But the implication of entrepreneur is meant, for better or for worse, meant to be smaller than, if a company's 200 million in revenue and 16 in EBITDA, or so, I'm just ripping here. It's right. Entrepreneur smaller than that, and it's a meaningfully different thing. Coda,
potential companies with EBITDA between 3 and 10 million. Boom.
Right.
Cool.
But I will tell you that they lean hard into 3 to 5. And there are a lot of lower middle market firms that just are they really want 5 to 10. And the difference between an EBITDA of 10 and an EBITDA of 3 is pretty meaningful.
It would definitely be meaningful to me.
Right. Me too. But I mean, all the characteristics, the flaws, the opportunity to invest in all that messy stuff in a $3 million EBITDA and a 10 million are pretty different.
Yeah. Let's talk about this resource. You kindly offered to kind of react to, offer some additions or some suggestions or some war stories about this resource that Umbrex published, the Umbrex Diagnostic Guide to Branding. And that's your whole space. So I know you've taken a look at it. Would love to hear, your reactions to it. Where would you like to start?
So the first thing I will tell you, Will, and I don't know whether you author this or with others, it is as comprehensive a document around this topic, this subject matter, as I have literally ever seen. It is spectacular. And the rigor and depth and breadth around which to think about, a pretty big topic, but that, a lot of business people tend to sort of put into a small box, is crazy. Now, again, I know you live in the world of management consultants and folks that, either probably have come from, very global, big, sophisticated, best in the world kind of places, right? But this is a 56-page deck filled with 10-point type. And the degree of minutia is, it made my head spin. And I wasn't quite sure if I was given this, how I might use it is a colossal brick wall to be climbed.
Okay.
So I don't know if I can share this with you on the screen, but I have it in front of me. I can just sort of a little bit read through this.
Yeah, you can go ahead and share it. And if you have some stuff to share, we can also include in the show notes. Sure. So go ahead.
Yeah, that's fine. So I just took some notes, right? This is sort of, the heart of what I'm describing. There's a lot of great framework kind of thinking here around the broad topics. And I love this. I'm going to liberally steal this with your permission. This idea of nascent, mature, developing, optimize is brilliant. A great way to rate a brand on subtopic factors, right? I love brand strat, communication, marketing, customer experience. That's sort of how we think about this. Because again, for the most part, we're brought in to solve for B2B companies and a lot of industrial companies, manufacturing, distribution, even services, right? That's loosely today the world we play within. And so the way to break that stuff down into who are you today, where's the company evolving, because M&A is such a big part of private equity driven sort of paths, right? And the competitors and the go to market and customers and that kind of universe. This is a fabulous way to think about this. I will tell you that the one thing that we typically do not think about, and in a weird way we probably should, is corporate responsibility. That feels very much like public company kind of lens, and maybe or maybe not it was thought of that way, right? Again, major hats off for being able to kind of go A, B, C, D upon a lot of factors, nascent, mature, developing, optimized. I love that. Here's where you kind of lost me, and it's about 30 pages in a deck.
Yeah.
It is, again, I try to put myself into your shoes and the consultants on your platform and where they came from. And that framework of, if somebody worked at McKinsey and their client was Ford Motor, or in my world, Landor or Interbrand, the biggest branding shops in the world. And, Ford, a division of Ford hires Landor or McKinsey or whomever, and you get, 3-4 months to do, you assign 6 to 8 people and you get paid $1 million to produce a 250-page deck. And to wrap your arms around this degree of rigor and detail in terms of what is demanded by that kind of client, what is expected by that kind of consultancy, what they're looking to get out of it, and how they will deploy it or put it in towards next steps and blah, 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 I get. Anybody below that, this is 60 miles too detailed. Now, could this be the framework to look at levels A, B, C of complexity and rigor and, whatever, and, take the foundational aspect of this, but into a $150 million company who are Philistines when it comes to any of this stuff and really only care so much because they're only going to do so much about it. But you could take the foundation of this and just compress it, streamline it into a degree of detail and time and money and actionability that is commensurate with who they are and where they're going, which is sort of the world we live in. It's the executive summary level of what you've done here. Phenomenal. But to apply, again, if one of your consultants or a small consulting firm and say, I'm going to take, 30 pages of, a couple thousand, data points and analyses, and then go, what do you do with that? And how do you present it? And how is it deployed? What do you do with this? I would love to hear, the thinking behind this, because again, exhaustive level of detail.
Yeah. No, thanks for that feedback. So, listeners, just to kind of give you an overview of the document that Scott's been talking about, to help support a diagnostic of a brand of a company, this document breaks it down into 5 major categories. And then each one of those categories, there is somewhere between 5 and 6 or 8 subcategories, right? So the major categories are brand strategy overall, communication, number 2, marketing, number 3, customer experience, and number 5, corporate responsibility, right? And then with each one of those, there's several different sub areas. For each of the sub areas, 28 of them, there's a one-page guide for that with a maturity model that Scott was referring to help say for that particular area, how would you rate it, right? Anywhere from nascent to optimized. So the concept of this particular resource was that many people may not try to go through the entire thing. The idea is it's more of a resource that you could draw from, right? So if you were looking just, say, at the communication function of a company and how it affects branding, you could pull out the relevant slides from that section. Or if you were just saying, hey, we're going to look just at the brand strategy, you could pull out, oh, there's one page just on brand positioning. So you could pull out just that one slide. So we wouldn't really expect a consultant to use this resource to say, oh, let me march through all 28 areas and do this guide. But it's more to pull out to serve as sort of a resource to support that. And there's a more exhaustive way of using the guide and a more high level way. So you could kind of go through the 28 and really in an hour or two just sort of check the boxes and get a sense of where your strengths are. Or you could do the 4-month version, Scott, the way you suggested. I'd love, Scott, maybe you to react to, are there any of those topics, those 28 subtopics that you've kind of typically look at, that you'd like to share an example of how you evaluate one of your clients on brand architecture or on their brand messaging or brand equity? I'd love to hear you kind of dive in on one or more of those areas.
Yeah, so I'm going to pull up a document. So just give me 1 second. Here it is, that I'll share on screen now, that we just developed fairly recently in response to one of our PE firm clients. We're working on 3 platforms at the same time, concurrently, and the brand architecture and strategy model are different. Think of ABC. A is holding company in a fractured roll-up situation, and we are working both at the operating unit level as well as the holding company level. But it's a little bit of the strategy behind it is very particular, that's typical to a holding company. Then we're dealing with one where they're taking 4 foundational companies, and from day one, they're going to create a master brand nationwide, come together and build a powerhouse nationwide in this category. The third of which is a very complex hybrid, that there's a foundational brand. They've already done a series of add-ons, and they are going to be eventually building a regional powerhouse unified brand. But the steps in that journey are very bespoke and hybrid for a lot of reasons. So the models and the strategies and the playbook are all very different, and working on all 3 at the same time. And so the partners sort of said to me, well, how do you decide kind of what to recommend and why? Okay, so this is a couple of weeks ago. So we developed this document that I'll share now in response to that, and then a little bit to kind of share with clients and prospects. So to us, this is philosophical as well as practical. That brand is the tail and the investment thesis is the dog. When we were brought in by private equity folks, whether they're partners or vice presidents or directors of value creation or the C-suite leadership of the portfolio company, they've already figured out their investment thesis is, I don't give a damn what I say. We're not going to change that. We are meant to amplify that and make it the best it can be in terms of time efficiency, investment efficiency, greatest value creation and exit, right? That's what they come to us for. And so it's a means to an end. That's why we say brand's the tail and investment thesis. The investment thesis is what it is. By the time that they have closed the deal, that's already in place. Not that they're inflexible, but it's like not going to radically change, right? Unless the world blew up or something. So what we did was along the lines of what you did, Will, was we developed our own 4 buckets. Brand architecture factors. What are the options? Number 2, what are the assets and the sophistication of any of the brand or brands that we walk into a platform along with add-on acquisitions? What are we walking into? What do they have? How good are they? How does stuff fit together, right? The third of which are business factors. Are they going to open up new plants? Are they going to be adding add-ons that are going to change their whole positioning and value proposition? Are they going to be opening up new, going from the East Coast to the West Coast? Are they going overseas? Are they developing new technologies? I mean, that's business stuff, right? Then there's the PE firm factor. What do they believe in? because there's certain PE firms who say, all we do is holding companies. Thank you very much. And if you can help us in that, great. If not, move on. There are certain firms that have a very open mindset about this stuff. We want you, Mr. Brand Consultant, to tell us what to do and why. Let's get consensus and let's go pursue it, given certain factors. So we need to know what we're walking into. So we look at these 4 factors, and there's, I think, 29 in here, which to me is exhaustive, but it's, an order of magnitude less than your document. Then we said, okay, if you put a gun to our head and say, which is the 2, 3, or 4 in each of these buckets that you think are the most important, whittle it down further. And we did this here. I think there are 4, 6, 9, 11. You put a gun to our head, these are the 11 we'd focus on. Now, are we right? I don't know, but it's, we did our best swing at taking 29 down to 11. And again, in a compare contrast to your document, even 11 is about all that a founder of a PE platform or a hired CEO or the director of value creation or a partner at the PE firm. That's about as much complexity as they'll probably handle relative to brand as anything against other things they think about between 9 and 5. And they think about a lot of stuff. Private equity is like their heads are exploding with priority and responsibility on a daily basis, and every day it changes. So getting these folks to listen about brand in any given day of the week is hard because you're competing for their attention and priority. So even 11 things is like a certain degree of rigor and best practices and experience to arrive at what the hell to do, because they are get cut to chase people.
All right. Well, Scott, is this a document that you are open to sharing? Can we include a link to download this in the show notes?
Yeah, after the recording, I'll be happy to just email this PDF and please share it widely. It's our name is on it, of course, but or is it? I probably need to add our name to this. I didn't.
All right.
But to be shared by third parties, but happy to. I mean, please, that would be fantastic.
All right. I love the layout here. It shows the branding and design visibility of your firm. Nicely laid out. Awesome.
We are sick in the head as it relates to design. Like I can't not do well-designed documents.
So I'm curious, in terms of the opposite in the spectrum, the very like the most abbreviated version of a branding diagnostic. When you first sit down with, let's say you're being brought into a portfolio company of a PE firm to do a bit of a branding assessment, what are the first questions that you ask the company to help get a sense of their current state of their brand?
Sure. So there are 2 due diligence and research processes and components that are critical to our, the way we do things. The first of which is we insist upon an in-person half-a-day information gathering and whiteboarding session with all the leaders that matter, right? Could be 3 people, could be 10. And we put together an agenda with all the major kind of inputs that we need to learn. They're typically, 8, the kinds of things that any consultant would ask for. And so what are we looking for? We're looking for interaction. We're looking for behavior. We're looking to responses to certain kinds of questions, interaction with each other, even the physical environment of the room, if it's at their facility, right? Because we are astute people and we notice certain things that are between the lines that are going to come down in the road as being important. Again, the design of a space is extremely important. When they take you on a tour, let's say their factory, their manufacturing facility, that maybe is the next room. How do they do that? So it's a lot of this qualitative between the lines things, not just factual. And that's, because we're a bunch of creatives as well as, business thinkers, but the creative side of us, is noticing things that other people won't. That's number 1. Number 2 is we do a detailed set of, Zoom interviews like this, about 30 minutes typically, and we'll do a certain, beyond the leadership that were in that intake meeting, We'll look at maybe customer experience people, sometimes even people on the shop floor. We want to get a cross-section of an organization and how people respond to the same questions given their tenure, and I'll call it responsibility within the organization, so we can triangulate, not just what the leaders tell us, right? So we do that, and then we go out to their external audiences, customers, channel partners, suppliers, and we may do 12 to 25 of those. And oftentimes, the most insightful stuff comes from the outside. We've been doing this for years, and we know how to conduct these interviews and to get what we need to get, and then sift through, all the data, along with a pretty exhaustive competitive audit. So think about those are three legs of due diligence.
You mentioned that you talked to these third parties. What is like your one go-to question when you're talking to those third-party suppliers or customers that you find is like gets the most insights?
You're going to laugh when I tell you this because it's the most elemental, disarming question. It's always the last question to every single interview, and it's really simple. In a couple of words, today, what's the brand?
Oh. What sort of responses do you get to that?
From the low end of I have no flippant idea to something around, again, a logo. Oftentimes but the answer is typically in the middle, big middle. It's going to be very kind of factual. What they do, the products and services that they sell, as opposed to, how we would sort of think about brand. Now, the real answer is if we query 20 people, we get 20 answers. I went to Vegas, Will, and you wanted me to bet my life savings on an outcome. It is that any one of these exercises, the amount of people we query will be the amount of totally different answers to the simple question, what's the brand? Take it to the bank.
All right. All right. Scott Markman, thank you so much for joining today. Monogram Group, where can we find you online?
Funny you should say that. Monogram Group, MonogramGroup.com. And then you can find lots of info about the agency and our clients and case studies and service offerings and markets and useful stuff.
Amazing. Okay, we will include that link in the show notes. Scott, thanks for joining today.
Will, appreciate it very much.